Hello everyone, it's 8:06 p.m. in Kiev, June 23rd. Let's take a look at Tuesday. And now we're going to do a fairly detailed analysis of the broadcast charts with you. That is, the broadcast itself is available to you via links on YouTube, but now we'll take a closer look at it, starting with the monthly candles. First of all, here are our monthly candles. We can see that the first wave of decline was 52%, right? Then there was a correction. And if we take the standard 5 Elliott waves, we can assume that this is our first wave of decline. The second wave is a correction, then there should be some kind of third decline, a fourth correction, and a fifth decline. I'm not an expert in Elliott waves, but I know that according to Elliott, the third wave is the longest. This means that if we assume that this second correction, the second wave, has ended, then the decline from the peak of the second wave to the end of the third should be greater than the length of the first. That is more than 52%. Well, let's at least mark off 52%. How much would that be for us? Well, that would be around $39,500 to $40,000. And considering that it should be even more, then most likely the drop will be, well, for example, down to the support at $35,000. What else do I want to point out to you here? This is an unclear level. A clear level. This is the level. The next candles, if we break through 58,740, that's currently our main support. This is based on this reversal candle here, but not the reversal itself, rather the highest close. In March 2021, you can see that from here we went down, then there was a false breakout, and then we went much deeper down as a result. Then we broke through this level of 58,740, traded above it for a long time, and moved on to new all-time highs accordingly. Now this is the key support. And below it, the nearest target level is the base of this large green candle. From February 2024, that's $42,580. We also have another level here, this black one. Yes, there was also a local correction here. It's just above 45,510. We can also use this level as a basis, but in reality, it didn't cause any reversal. Yes, there was a red candle after it, but then the price went up. So in fact, there was no correction here. But notice that later, when we broke through it, we tested it once a month, twice, 3 months in a row, with wicks, without breaking above. So it also matters in a way, but it's also below $50,000 to $47,100. A lot points to this. Moving on. The overbought and oversold indicator. Look at where it is right now. The value there is about minus 3.8. This was about the same value here in May 2022. Here, look, I'm moving the cursor down and we're on the May candle because in June it was already... Let me adjust it so it's clearer. Let's not do it this way, we'll do it differently. Now I'll expand it to full screen. So look, here's the May value and here's the June one. It's already much lower. Accordingly, we should focus on the May value, and with the same level of oversold, I take the shadow of the May candle, the lower one. We went down another 42%. That is 42% from the minimum at that time. Here we do the same. 42% down. And again, we end up somewhere in the area of the pink target for decline. That's around 35,000 to 34,500. It's perfectly clear. So, looking at the charts, we have both the significant potential and a wide variety of technical models, all indicating a strong downward move. At least this is because the current monthly candle, just a second, please pay close attention here, could potentially give us the lowest closing price we have seen since about, well, since the early part of last year, which is a very bearish signal for the market right now. September 2024. That is, the September candle closed somewhere around the current levels, maybe a bit higher. So we figured out the monthly candles. For now, everything points downward, and the only things holding us up are the 50-month moving average and the 58,740 level. And if we break through that, then the next target is 47,100 and potentially the 100-month moving average at $40,000. And even the lower boundary of this target is $33,000 to $35,000. For now, that's the only scenario that seems likely. And the overbought and overheated state of the stock market, though we won't analyze it right now, suggests that the potential for a decline in the cryptocurrency market as a riskier market is very significant. Let's look at the weekly candles. Notice that on the weekly candles we don't have oversold conditions. On the contrary, we actually see negative momentum in this indicator, but we haven't entered the oversold zone, nor is there any sign of a reversal upward in this indicator. At the same time, right now, for several weeks in a row, we've been testing the 200-week moving average. And if we break through it, we could head toward the 300-week moving average. That's around the $55,000 area. Also, let's pay attention to the fact that this week, the big red one really stood out. Let me grab some drawing tool. It broke out of this range and closed lower than any other candle this year. So on the weekly candles, we've once again had a major correction. And as a result, we dropped below this trading range. This is highly likely. And at the same time, we set a new low and closed the candle even lower. This strongly suggests that the downward movement will continue. So where to next? Well, here we have a marked level. Here's the next level, $51,728. And the 300-week moving average is $54,555. So on the weekly candles, there's not a single reason to buy, absolutely none. Well, let's take another quick look. Here, by the numbers, yes, the opening of the green week was at 63,332. The closing of the red week was at 63,311, so the red week engulfed the green one. And even by these signs, we can say that the sellers have won. We've looked at everything on the weekly candles as well. Here too, the monthly and weekly both point downward. For a downward move, let's look at the daily candles. Let's expand it to full screen. What do we see on the daily candles? The key support level is $62 and 1,909 cents. But I don't know where it's drawn from. Here, it's drawn from the green candle. Well, it could be from the red one, it's not critical. They're the same. So pay attention to the fact that Bitcoin was trading below this level. Then there seemed to be a false breakout. It went back below it again, but eventually it consolidated above it and couldn't break through for a long time. And now if we close below it today, this indicates a return below an important level. Right now it's support, but later it could become resistance below the key level of $62,909. Which means, first of all, there is potential for a decline to test the level. Here is the base of the growth. This is the area around $61,000. And potentially it could go significantly lower. The dynamics of the overbought and oversold indicator suggest that Bitcoin is looking downward and it is not oversold at all. According to this criterion, it is in a neutral position. Yes, we do have a potential growth target here, the green one. But note that we also had a target here, but we reached it much later. You can't say there was any deep decline here, but nevertheless, we didn't go to fulfill it right away. But in the end, the target was formed around February, at the beginning of February. We reached it here somewhere at the beginning of May, a few months later. So we might also reach this target in a few months, or maybe even in a few years. In other words, this is one of the signs that yes, there could be growth, but everything else points toward a decline. Again, the latest current movement right here and now indicates that we have a bearish engulfing pattern. Now I won't expand it to full screen anymore. Let's look here. The dynamics of the overbought and oversold indicator are pointing downward on the 12-hour chart. Here we also have a bearish engulfing pattern. There is nothing indicating growth. Next point, the 4-hour candles are oversold. But first of all, there is no reversal of this indicator upward. All the candles are red. We are trading below all the moving averages, which also points downward. Hourly candles. The hourly candles are currently indicating growth, but this growth is likely limited either by this target or by the rise to the area of 63, around $63,150 to $63,160, and maybe the nearest moving average. Right now, we are getting a bearish signal, a crossover of the 50-hour and 100-hour moving averages. There you go. But the 50-hour moving average is declining sharply. Well, somewhere around the 63,300 area, we might come up to test this moving average. So it's not a grand or global rise. But locally, right now, there is probably a very, very modest and very questionable upward priority according to the hourly candles. At the same time, note that for the first time in a long while, on the 15-minute candles, we are testing the 50-period moving average, which means that on the first attempt at the first touch, we are most likely not going to move upward. This isn't a rule, but as a rule, on the first test, we get a continuation downward, and then only on the second or third attempt do we break through and head toward the 100-period moving average. So that's the 15-minute candle. And the 15-minute candles, according to this logic, and within the framework of negative momentum, actually suggest the opposite, that the hourly candles, most likely right now, they might not go on to reach this growth target. As a result, the overall scenario looks like a move toward the $55,000 area and even down to the $33,000 to $35,000 range. If we open the stock market chart for a moment and look at the weekly candles, we'll see, and again, I've mentioned this before, this huge cluster of downward signals. We see negative momentum in the PPO against the backdrop of an overall overbought condition. Yes, the weekly candles are practically screaming and want to go down. This doesn't rule out making. Let me remove these markings. This doesn't rule out another possible bounce upward with the divergence forming on this indicator, meaning without an update of this indicator's previous high. But with the index value updating, reaching a new all-time high, and then further down after that, but it's absolutely not the time to buy, and absolutely the index, and absolutely for sure. This structure on the weekly candles is putting very serious pressure on the cryptocurrency market. In other words, it practically leaves no chance for growth. Just like if we look at the monthly candles, here there is only one single indicator, well, maybe not just one, but essentially one, that gives multiple purple signals downward. But nevertheless, pay attention here. There was also strong overbought pressure on the monthly candles. Now we've already updated. Let me zoom out so it will be more visually clear for you. Look, there was strong overbought pressure at lower index values. Now the index has risen significantly higher, but the overbought indicator does not reach the previous highs. This is a divergence. And as soon as we see a red monthly candle against the backdrop of this divergence, ideally one that engulfs the May candle, that will be a very strong short signal, indicating a decline to the 5,900 to 6,100 range. I've talked about this a month ago and maybe even 2 months ago. But overall, the situation in the stock market, judging by the monthly and weekly candles, is very bad. And it exerts very significant pressure, though invisible, on the cryptocurrency market. This does not mean otherwise. I emphasize that the stock market is obliged to go down right now. It's not forbidden for the S&P 500 index to update its all-time high once more on the weekly candles, but historically it has done so on all candles, historically speaking. But what is meant is that it should form a divergent structure on the weekly candles and then go down. Therefore, I recommend refraining from any purchases, both in the cryptocurrency and the stock markets. And my forecast for Bitcoin is a continued move downward. Well, I don't see it yet. Any reasons for growth? There are no long structures at all, but as for short structures, let's put it this way, they are not just emerging, but are in a state of continued decline. Again, it's not out of the question for Bitcoin to bounce back by $2, $3, $4, $5, or even $10,000. I'm not Grandma Vanga to claim with certainty that something won't happen. But here and now, the chart is showing a continuation, further downward. That's my expert opinion. You should decide for yourself how to use this information. The current value of the S&P 500 index is 7,460.7 points, and the current value of Bitcoin is $62,580. Well, again, the hourly candles suggest growth to the area of 63, maybe 63,300 or 63,400, but all the other time frames indicate that it's still more likely we'll see further downward movement. And it's quite possible that as soon as tomorrow or the day after, we'll see Bitcoin somewhere around 58. This concludes the review.